I don't consider myself a real Bitcoin OG, by the way, because I read the white paper for the first time in 2013. So I missed the first 5 years, and those seemed like the real cowboy years where the big changes happened. But I see the Bitcoin market as a very small market still. It has grown, but I mean, when I wrote my paper, it was under 100 billion, so it was 60 or 80
Yeah.
billion. When I started investing in 2015, it was even smaller. But and those are that's like not even a big cap stock in the S&P 500. It's really small. So for an institutional investor, it was a gain. If you're used to trade and invest in the bond markets and the equity markets and all the very large derivative markets, the interest rate swaps, etc., mortgage portfolio, structured finance, it's all in the billions and billions per deal. So and I've seen Bitcoin grown over the years. So especially 2017 when the futures came, that was a first step. And I want to tell something about futures because a lot of people are scared about futures and they think that they will be used by governments to manipulate markets, etc. But for me as an institutional investor, it's a sign that the market is getting more mature, like an option market. For example, as an institutional investor, I wouldn't invest in a market where there's not a futures market, because a futures market is another way of getting rid of your exposure. Instead of selling the asset, you can go short the future. And for example, if a market is closed, because that sometimes happens, right? I went through the 98 crash and then the 2000 crash with the the IT bubble, and then the 2008 crash with large exposures. And sometimes markets are just shut down. And then you're so happy that there's a futures market, maybe in another time zone where you can get rid of your exposure and hedge your positions. So but there's one story I want to tell about futures that maybe a lot of non-financial people don't know. But did you know that the Romans already had futures for their olives trading? Right, there were olive farmers and olive oil. And the thing was that there was one big risk for those farmers, and that was frost, right? The weather. If the winter was bad, if there was frost, then the whole olive harvest would be gone. So it's a zero or everything game in the spot market. So they have to invest up front on the land, work for the land, and then get the olives and sell them in the end, and they have everything or nothing. And then came the futures market. So there were some rich Romans that said to these farmers, "Hey, how about I buy your olives right now? I have to give you a lesser price because of the risk involved of the frost. So let's say 80%." And the farmers were like, "Yeah, of course, get rid of the risk. You take that risk." And 80% is okay. So now a lot more farmers were willing to take that risk to have the money up front invested in the land with their hours and make the olives. And the rich Romans that did those future buys, they could of course spread that risk, because they do the same deal with another farmer a little bit more south in the country, or at another country altogether, and they can sort of hedge their positions where the farmer alone could never do it. So for me, even the futures ETF, it's a great thing, because ETFs are a bit scared about Bitcoin and the custodian thing and the keys and all, but they know futures, so they're happy to pay 10-20% premium and for a long position, and take that as a cost. But they don't have that risk of custodian and all that. So, and there's of course the other party that takes the sort of risk neutral return of 10, 20, sometimes 30%. But they do have the custodian risk, and they have to ship around those Bitcoins. But in a way, it's the same risk that's just being split between two parties. And I think that's a great thing, because that opens up the entire market for more players, more farmers, if you will, in the Roman example. So yeah, I think it's great, and we'll see a lot more maturing of the market with spot ETFs, which will come with countries entering, with central banks putting it on their balance sheet as a currency. Yeah,
See,
the future will
see,
be great. Yeah, to be honest, I view the on-chain. I think the on-chain analysis, for me at least, is most valuable in identifying tops and bottoms. So identifying FOMO transactions, if you will, at around the all-time high, and panic liquidation kind of reactions or transactions in a bear market, at the bottom of a bear market. So, and you know it when you get there, right? So I could not say what the top of the market will be right now, because we're not in a FOMO situation. So at least I know we're not in a FOMO situation. So it is not the top. But I don't know when the top is, and that's that's of course the difference with the stock to flow more fundamental model that has gold data and stuff in there, that you can very, very roughly say something about the level you could expect the next Bitcoin price level to be. But on chain, so at least I can say we're not in a bear market right now, and we're not at the FOMO end of the bull market. So we must be somewhere in between. There's several technical indicators that also say the same thing. And so given that fact, I would extend the current uptrend with a couple of months, and that brings us well, I mentioned the numbers before. Of course, the next 2 months are very well known. I think we will end in the roughly at 98 at least this month already, which is huge. Nobody believes it. And then 135 in December at least. And
if
then
I can just cut you off for 1 second,
sure.
I just wanted to say, like, I think kind of what you're getting at, and something that I've been thinking about lately, is you have a lot of people come to you and say, when is the top, right? Like, what's the exact price and what's the time? But it's not that. With on-chain, what you're really looking for is what are the behaviors that resemble euphoric behavior from these market participants, right? I think that's what you're trying to get at here.
Yeah, absolutely. Yeah, I'm not interested in the top at all. So I don't know when it is. Yeah, when we get there, I know it, but I don't know where it is. I'm not interested in that, because I know it will be probably a 1 minute spike, right? I cannot trade it. I cannot sell or buy at that price level. I'm more interested in the general level where it hovers around, where it will. So no, it's exactly like you say. So. But still, I think we'll go on in Q1, because that's another thing you can measure from on-chain. You can see the shortage that we're all talking about. How many Bitcoins are there? And you guys are really looking at coins at exchanges, and are they leaving exchanges to cold storage or coming at exchanges? But I'm looking at it at an on-chain level. And then you see that shortage building to a moment where it pops. And we're still without telling what I'm looking at exactly, but we're still months away from that popping moment. And so I would say the top is at least 3 to 6 months, maybe longer away. And I want to make that very clear, because when I type Plan B in Google, the first 3 things you see on in the search results are big crash is coming. Plan B says the market will crash imminent. I don't know how these outlets come to that and attach my name to it. I really don't think a crash is coming. I think we'll see a bull market that goes on for at least 6 months and bring us in the 100,000, 200,000. I wouldn't even be surprised with 500,000 Bitcoin in early 2022. But when we get to the sketchy part, when the FOMO transactions flow in, and you can detect those transactions, they are very distinct, then well, we have to all be a little bit more alert, right?